Sam Stovall is with us, Chief Investment Strategist at CFRA. So look, people have been talking about maybe the market was a little frothy. You're seeing a little bit of a pullback today. So I don't even want to call it a pullback, but we're down 0.2%, a hotter than expected wholesale inflation print. How are you feeling about the market overall?
Hey, Nicole. Well, I think the market is due for some sort of digestion of gains, but I really don't think it would go much beyond a pullback, which is a 5 to 10% decline. I'm feeling that, yes, that inflation readings, investors are scratching their heads, wondering whether we really have to worry about a backup in the inflation readings. We saw hotter than expected CPI and today PPI. And then the question will be, well, what about the Fed's favorite measure, the PCE, later this month? So with the Fed meeting for next week, I think that they will confirm that they are going to be slower to lower interest rates, and that at best it'll be the first cut in June with a total of 3 25 basis point cuts for all of 2024.
3 cuts, that's what you're counting on, huh? When you think about what's going on here, people are saying follow the money flow, and that we go back to 2020 during the pandemic and how if people bought then, but if you were following the money flow and the Fed's moves, that could also drive things. Maybe there's more liquidity. It just seems there's more bulls out there than bears these days.
Oh, I would think so. And you can see that based on some anecdotal measures. The CNN fear greed indicator last week was reading extreme greed. The AAII membership poll showed that the bullish reading was, in their words, unusually high. And so I think that there is overall a great amount of optimism. And for the whole year, I would tend to think that investors are correct. But I do think that in the near term, with so many people being optimistic, that we are vulnerable to some sort of downward move.
Yeah, I mean, it almost feels like when you start to say phrases like extreme greed and bullishness is unusually high, it starts to feel like a contrarian indicator. But to your point, and some of the stats that you always bring us pertaining to the presidential year, when you have the incumbent running, generally, based on what we've led up here, this is likely to be a winning year, right?
Oh, absolutely. Well, we've had 17 new highs in the S&P 500, which on a year-to-date basis is the greatest count going back to 1928. Since World War II, the highest count prior to this one was 1987 and 1998. So a couple of years that could be of concern, but also realizing that whenever the January has been higher in an election year, the whole year has been higher 100% of the time, with the average gain being a bit more than 15.5%. So a lot of historical indicators say that for the full year, it's going to be good, but just realize that it's not going to be a straight line upward.
Yeah, and what are your thoughts on earnings season overall? I mean, the expectations for how companies are faring.
Well, earnings for the fourth quarter came in much better than expected. As of the beginning of the quarter's reporting period, S&P Capital IQ consensus estimates were calling for a 2.1% rise. However, now that the Q4 reporting period is almost finished, we're looking at closer to a 6% rise. So this is now the 57th of the last 59 quarters in which actual results have exceeded end of quarter estimates. So in other words, management has done a very good job of managing expectations. However, the Q1 of 24 estimate has come down versus what it was at the beginning of the year. Ditto for all of 2024. Now the estimate is for about a 9% gain versus a prior estimate of 10.5%. So I think we have to start to see an improvement in earnings estimates to be able to maintain these lofty levels.
And so at this point, yeah, and 10.5%, 9, even those are lofty when you talk about the outlook, especially when we're supposed to be in sort of this tepid wait and see mode. I don't know. At this point, what's your advice to investors to position a portfolio? Do you have certain sectors that may fare better than others? We did get a hotter than expected print today. We do have higher for longer. You're expecting 3 cuts this year. What do you say about positioning a portfolio, the do's and don'ts?
Well, if you are a near-term investor, meaning you are somebody who's willing to make some more tactical moves, then I think that some areas that look fairly attractive and are showing an improvement in momentum happen to be the energy, utilities, and materials sectors. Utilities right now are trading at about a 25% discount to its 20-year relative PE. So with a group that's paying about a 3.5% dividend yield, if you are an income-oriented investor, these might look fairly attractive. Longer term, however, my belief is that you're better off buying than you are bailing. So take advantage of what I think will be a short-term decline in the market that will end up righting itself fairly quickly.
All right, Sam Stovall, great to see you, CFRA. Thank you, Sam. Really appreciate it.